poorly, you could very well have exposure to ongoing liabilities after the sale. If the contract is put together very well, you may still have some exposure to liabilities. A lot of it depends on the disclosures you've made and the representations and warranties that you've made in the purchase and sale agreement. But a good attorney, a good law firm, will be able to actually put together a purchase agreement that will limit the seller's exposure to future liabilities downstream based on making sure that everyone understands what's being bought, what's being sold, what guarantees, what warranties the seller is making to the buyer, and that full disclosures have been made so that the buyer doesn't come back and say, well, Mike, you never told me about this. That should be your problem, not my problem.
Mm-hmm. So, bottom line, be sure that you get a good attorney involved in this process. Now, another thing that comes to mind, though, is if you have like a corporate form, and if you've done a good job with it, that's going to provide maybe some protection, at least from a personal liability standpoint.
Sure. In terms of forms of entity, you've got several choices that you could have in terms of how you set up your company. So you could be a corporation, and in which case, if you're able to sell the stock of your company to a new owner, then you're probably going to see some limitations on liability as an individual shareholder. Mm-hmm. Again, it sort of depends on how the contract is written, because even in a stock sale, the individuals who are stockholders could have been required to make certain representations as well.
Right.
So really, I think the key to ongoing liability is to work with qualified professionals, work with a good intermediary, work with a good CPA, work with a good law firm that has been through this before and knows where the pitfalls are.
Okay. What are some alternative structures of sales? So this is a little bit what we were talking about, and the advantages and disadvantages of each. So I think we were thinking a little bit, or I was thinking a little bit about sale of stock, sale of assets, and so forth.
Sure. If you're organized as a corporation, then you really have two types of sale that you could do. One is, as the shareholder, you could sell your stock. Mm-hmm. And then this would be just like would happen on the stock exchange. So with a public company, a buyer is actually buying stock in IBM, for example, or mm-hmm. General Motors, or, well, maybe not General Motors. Mm-hmm. Not right now.
I think there's still a little bit of it on the pink sheets or something.
But in any event, that would be what would happen if you were just buying stock on the public exchange. You can actually, as a buyer, buy the stock of a company, in which case the individual stockholders are the ones who are the sellers. Also, however, the corporation itself could sell some or all of its assets. And that's an alternate form of sale. It's actually the most common form of sale, where the corporation is the seller and it sells all or substantially all of the assets of the business, and then the buyer is actually buying that but not taking the stock of the company.
Right. And part of what we didn't talk about related to this is that a lot of buyers prefer to buy assets because they're concerned about, for example, those contingent liabilities that we were talking about coming back to bite them. And so that's one of the reasons why the sale of assets is more popular. Another thing, though, is let's say you have an S corporation, the tax guy here, if it sells its assets, then what's going to happen is that is a taxable transaction that's going to relate in that being taxable, possibly with depreciation, recapture, and so forth, and then resulting in additional tax liability for the shareholders. And so anyway, so it gets a little more complicated for an S corporation than if you just have a sale of stock. Mm-hmm. A real big one is, for example, for auto dealers. Okay, so many auto dealers, especially of individuals owned, rather than the big corporate groups, they have LIFO inventories, and so they're going to have a LIFO liquidation related to that, resulting in a huge ordinary income amount. Whereas if they sold the stock, that would not be there. So these are some things. That's why you need a good tax person at the table to be advising you related to this sort of stuff. Okay, so now we were sort of talking again. So let's sort of go down the list again. What advisors should be at the table related to putting a deal together? What are some of the roles of some of these people?
Well, I think a good business broker, obviously I have a vested interest in saying this because it's my profession, but I think a good business broker or investment banker or mergers and acquisition specialist can be of great value to both buyers and sellers in a transaction. We do this all day long. You know, we've been through countless transactions. We've seen the good, the bad, the ugly, the mistakes. We've worked with all the other professional advisors or representatives of the different types of advisory firms, legal and accounting and so forth. And so we sort of understand the interests of each one of the parties to the transaction. And so I think a good intermediary can be very, very helpful in pulling a transaction together and optimizing the quality of the transaction for both parties. I think a good tax advisor is critical. A good CPA, a good tax attorney, both very, very important to the transaction for some of the reasons that you spoke about just a minute ago. Mm-hmm. I think a good transactional attorney, a good corporate attorney is very, very important to the whole conduct of the deal. And then finally, I think it's also important to look at a financial advisor who might be there to look at the situation of the individual shareholders and or the corporation and help to plan what to do with the money.
Yeah.
I mean, that's a good problem to have, right? What do we do with the money, assuming that the tax advisor helped you keep it?
Yeah, but as we've talked about on this show before, there are many people that get a windfall. I mean, and we all know this, it's sort of the classic story, you know, the person who won the lottery. Well, this is your lottery now when you're selling your business. And so what happens quite often is within a couple of years, that fund is dissipated if it's not handled with discipline. And so you do want to get a good financial advisor in there to help you in managing that so that it doesn't all get lost. So that's really important. Okay, so my last question, can I or should I continue to work in the business after I sell it? And what are some alternatives? And how can I replace the income from the business after I sell it? Those are two big questions.
I think it's about 4 questions in there, isn't it?
And you have 1 minute.
That's terrific. Yes. The answer to that question is that there are some really good arguments to continue to work at least in a transition capacity, whether it's as a consultant or as an employee of the new owner of the business for a period of time to assure a good transition. That helps the buyer, keeps the customers comfortable, keeps the employees comfortable, keeps the vendors comfortable, optimizes the chance that the transition will be smooth, and gives you good comfort as the seller of the company as well that things are going to be handed off really well. It also can be of good benefit to the buyer in terms of having that resident expertise in place. As far as how you can do that, you can do it as a consultant independently, or you could actually be hired back by the buying corporation to work for them as an employee.
Okay. Well, I think we're going to have to wind this up. So it's been a lot of fun.
Great.
I appreciate you again, you coming today and sharing with us some information about this. Again, I want to remind our viewers, Michael can be, his website is Crosspointe, it's spelled CROSSPOINTE capital, which is CAPITAL.com. And so you can get in touch with him through that website. And again, I would like to hear from you, our viewers, about your ideas related to this show and any ideas that you have for guests. Also, I am a CPA, and so welcome, helping people with their tax and business problems. My name is, again, you could write to Michael at financialinsiderweekly.com. Thank you.